Okay, hi everyone. This is the Orderflows trade analysis for Wednesday, June 22nd, 2016. My name is Michael Baltos. I'm the founder and trader of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. So that said, let's just talk about the tools used in this presentation. First is the Orderflows Trader, which is the main order flow footprint chart. The second is the Delta Scalper. And the third is the Orderflows Price Rejector. And it all runs on the NinjaTrader trading platform, which you can learn more about at www.ninjatrader.com. Okay, so it's been, today was the second day of Janet Yellen's testimony in Washington, and more importantly, it's the day before the Brexit vote. And coming into the session, we had seen yesterday been in a pretty tight range, and this morning, it was no different. We had a very tight range, 77 up to 85, 85 and a half after the cash opened. So that's a very tight range. That's 8-point range, and we started going higher. Okay, we got some divergences there on the way up, still making the highs. We had a ratio here, 81.7. There's a divergence. You got a strong negative delta. You got this selling imbalance in here, 2,500. I got short at 88. And what happens? It starts rallies up, rallies right up against me to 91 and a quarter. Now, I know that there's the Brexit vote going on, and Janet Yellen's talking, so you're going to get. I really wasn't expecting to trade today. Even the trading room, I closed early today just because it was kind of a boring morning up to this point. And again, I said I wasn't really expecting to trade. I saw this and I felt it was worth a flyer. I'm seeing some heavy selling coming in here. Just even earlier when we hit this high, you see a strong negative delta 2,000. And here even earlier he came up to within a couple ticks of a tick of the high. You had a strong negative delta 2,000. We come up here, we got a strong delta 2,000. Even though we were going to pop up a little bit, I'm willing to give it a chance, wait for another a round of selling. So I gave it a bit more breathing room. My short at 88. It's already 3 points against me, 3 points, 1 tick. And, yeah, honestly, I was starting to sweat it when we got up there because normally I don't want to risk more than 2 points. 3 points is stretching it. And, but then, I started seeing the selling come in here. We traded some decent volume up here, 4,000. So, okay, I felt a little bit more comfortable after seeing this bar form down and then this bar here with a strong negative delta. Because even these deltas, 46, 31, here, they're kind of small. And, overall, it's, there was strong selling earlier in these bars. Selling dried up, market drifted up, and I was waiting for the selling to really take over, and it started to come in here, minus 1,000, minus 711, kind of neutral. But then 960, I'm thinking, hey, okay, honestly at this point I was thinking, should I just scratch it or what? But I saw the min delta quite strong, 1,300, 700. 1,500, 1,000. I felt comfortable in it, and as luck would have it, we trade right back up to the high. Now in this case, you got a divergence, this arrow, got a ratio that I like here, and then we see the imbalance is 1,000 here, 691. Even in the next bar, you got 691 in this bar, 146, 449. This is a stacked imbalance that it's just split between two bars. And then you get another imbalance here, and then you see the delta 1,600, minus 1,600, minus 1,400, minus 1,900. Boom, we trade right back down to my entry price at 88. Okay, now I'm very comfortable in this trade, and we trade down to 84. Actually, it's 84 and a quarter. I was looking for a move down to 84. We didn't get it, and We got within a tick, trade back up to 87, but then, we still got that big, nice big imbalance there, 2300. I stayed in it. And, we just sort of went sideways. Came down to 84.5. At this point, I got into the trade, just before, 9:45. And, at this point, it's already 11 o'clock, which, I don't, I'll say, 10:40. I don't really like to hold the trade that long, honestly, on a 5-minute chart. But, it was in my favor. And, I didn't really expect us to go back up because, we had that big wave of selling. And if we were going to rally back up, I was going to look for a bit more of selling to come in. And we just went sideways, So I threw in, after we traded down here and popped back up, I felt, I should try for 85s. I abandoned my 84 price target. 84 would have been better, but, we didn't get there on that move. We got within a tick of it. And, we just went sideways. Finally we traded down to 85, back here at just after 11, and then we fell over. We had a 3 in a row actually right after I got out here, right after I covered, boom, 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 and we just went lower. But that was the only trade that I took. It lasted longer than I would have liked, almost an hour and a half. But, it was decent. It was 3 points, short at 88, out at 85. My target was 84. We got within a tick of it initially, and then just sort of went sideways afterwards. And, I bumped it up to 80, 85. If I stayed at 84, yeah, I would have gotten it. But, what can you do? Going sideways, looking for that push down to 85 to get out. And, I took the chance. We could have just traded 85, 87 for the next hour or two. But, but it did sell off. It sold off down to, well, it did go much lower later in the day, down to, what is that, 76.5. There's no way I would have held it down there, but, there were some more, some interesting things here, later in the day at just before 2 o'clock. Sort of had the swing low here with the price rejector kicking off. Then you get a buying imbalance afterwards. Then you get the buying, right after the stacked buying imbalance, you get the ratio, which I like. I like to get the ratio right after the buying imbalance. And you get a nice little pop up here from, was that 81.5 up to, almost 83.5. It's a nice little 2-point pop. Then you get the price rejector kicking off there again, telling you to get out of your long and think about getting short, and we sold right back down to this next price rejector. So, that was the one trade that I took today, and there were some other interesting things in the market. Currency markets have been pretty nutty lately just because of the Brexit vote, but I'm going to show you a Euro-US dollar chart. Okay, so this is the Euro-US dollar chart. This is a 1-minute chart. This is a bar chart, not the Orderflows trader footprint chart. But this is the Delta scalper indicator. Now, I don't know. Some people really appreciate this indicator, and some people, one guy wrote to me, it's the worst thing he's ever seen in his life in 20 years of trading, which I find very hard to believe, especially when I ask him, what sort of chart you're looking at, what sort of time frames. I want to know why he thinks it's so bad. But, this is a market, the Euro USD, the Euro Sterling, the Sterling US dollar, right now it's all going to be, all these currencies are going to be very volatile just because of this Brexit vote. So, this is this morning, this is a 1-minute chart. Okay, and here's the Delta scalper kicks off, right down here around 112.70. We rally all the way up here. This is a nice move. I'm not saying you're going to catch the high up here at 13. But you could have caught some part of that. Then here it gave you another buy. Again, almost around the same level, a little bit higher. It's around the 80 level, getting long. And we trade all the way up to above 113.10. Okay, and later we come off. There's no sell signal. Unfortunately, yeah, I would love to get a buy and then the sell signal right on the high, but it's got to meet market conditions. Okay, here's one. This one failed. Okay, trading signals fail sometimes. Not every trade is going to be a winner. Some people think that order flows is the holy grail and that every trade you take is going to be a winner. No, I have losing days. Earlier this week in the trading room, I think I took 3 trades. 2 of them were losers, and the one that was a winner was just like a half a point winner. Sometimes trades results in losses. That's life. If you come in thinking that every trade you're going to take in the market is going to be a winner based on your back testing, you're wrong. There are going to be losers in the market. That's part of trading. I'll say part of trading, but that's the reality of trading. You can have the best setup in the world, the best indicator in the world. You click buy, but 10 seconds later, the guy sitting at Barclays has got an order coming across his desk to sell 5,000 E-minis, and you're long one. He's going to run your position over by 2 or 3 points, and you're going to get stopped out, and you're going to take a loss. I mean, that's just life. People don't realize it. They think, well, I have this magic indicator, everything's going to come up roses, and I'm going to have chicks and a yacht and a Ferrari. No, it's not like that. Trading is work. And if you come in thinking you could just buy an indicator, plug it in, and every trade you take is going to be a winner, and if it's not, you're going to make noise and call me a scammer and all that. Whatever. People like that exist out there. You go to college for 4 years, right? You study your butt off, and you go to get a job. It's not easy to get a job, right? And if you can't find a job right away, what are you going to do? You're going to go back to the college and say, hey, give me back my money. Nobody wants to hire me because the education you gave me is bad. I mean, come on, But people out there, they think that everything is, there's a magic indicator to the market. There's not. So this one failed here. And if you just started trading here at 11:50, started your day, boom, you have a losing trade. You think, oh, this is the worst thing ever. Yeah, I could understand that. But you can't just come into the market, turn a machine on, and expect to have winning trades be spit out. Trading is unfortunately sometimes a numbers game. You have to have trades and trades and trades, and over time, your winning percentage had better be better than your losing percentage, so you come out ahead. But then here it gives another buy. It comes down a tick before it turns around and then rallies 15 ticks. Here's another buy. Right here on the swing low. Boom. You're getting along. At 92. Goes up to 1305. Yeah, it comes back down to 98 before turning around, going back up late. This is already 2 o'clock in the day. So that's the Euro USD chart. Okay, so this next chart is the Euro USD. This is a 5-minute chart. This is a different indicator, the price rejector, telling you that prices are being rejected at a certain level. Say the market rallies or hits a point where it doesn't think it can sustain that move. That's where price rejection is. Or if the market is selling off and it can't go any lower, prices below that level are being rejected. So it's you're either looking for buys, you're looking for sells. And here was one at, what time was this? 7:10-ish here. So just giving you a buy. This is a 5-minute chart again, so your time frame's a little bit longer. That's a nice buy. 112.80 to 83. This area here. We rally. The first push was all the way up to the 113.20 level. That's a decent move. That's 40 pips. Yeah, we came off a little bit, back down to 113.01. I don't know if you would have got out here, or waited to go back up, but it gave you a nice buy, gave you that nice initial push up, telling you that prices down here are being rejected. Okay, a little bit later, it gave you one here, sort of after the sell-off, bounced back up. This one failed. Okay, well, are you willing to? You have to have stops in the market, especially on days like today where there's a lot of crap going on in the markets. If you're trading Forex and your Forex dealer hasn't told you how volatile the markets are going to be and that orders will be worked on a best effort basis and and things like that, you might want to change your broker because legitimate brokers will tell you about the risks that are involved. I mean, they've raised margins on a lot of currency contracts, and they're saying don't trade unless you have to, basically. I mean, it's enticing a trade on days like this where there's going to be a lot of volatility. I mean, on days like today where you have this vote, it's a major vote. Britain's the 5th largest economy in the world, and so if they separate, it's important. So the market can have quick violent moves on stories, or someone's talking, saying something, but it's not necessarily backed up, with so there may be rumors in the market that can move the market today. So here you had a nice move. Okay, this was a nice 40-point move. Are you going to risk a couple ticks to catch a 40-point move like here? You're willing to risk this to catch this? Here you're taking the chance, and you got to take it. You got to take the loss. I mean, people don't like to lose, because it's not validating to their psyche. They want every trade to be a winner, so they feel good. But it just doesn't work that way in trading. I mean, if anything, you should feel good after a loss, thinking that, hey, my next trade will be a winner. I got one of my losers out of the way. But in trading, that's why you have to have, stops in the market, because you're going to control your risk, right? So you're willing to risk 3 or 4 ticks to make 20, 30, 40 ticks in profit. That's what trading is about. Okay, so this is, well, as I'm recording, this is 3 in the morning Chicago time. This is all Central time. So you got a couple buys here. Again, this one, traced back down. You're getting along off here, or somewhere around the 21 level. We're only trading 19. I don't think you're going to use a 2-tick stop, but nevertheless, it did rally, from that 19-20 level, up to 40, 41, 42. But realistically, you should be looking to get out somewhere in here, especially after this down bar. We did go up a little bit later during the session. Another buy. This one didn't really work out, just sort of went sideways. Europe just opened, at 130, and now you're really seeing the bars getting bigger. And a lot of volatility, very wide bars. You're talking 113.48 down to 37, so it's 10 ticks a bar. So this was a buy here on this 36. Yeah, we traded 10 ticks before we fell over. Honestly, once you start going sideways like that, you're going to get these sharp moves. Once you start going sideways, the trade's not working out. You have their high, and if you can't take out that high, subsequent bars, it's not looking. Don't expect it to take it out. An hour later, you should be looking to cut it. And this is where we are right now at 3. What time is it now? It's just after 3. It's about 3:05. Okay, so this is the Bunds this morning. Actually, this is right after the open, the futures open. Came down, 104. It opens at 1 o'clock Chicago time. You got the delta scalper. You got a ratio. You got a divergence. You got everything you want, basically, except the price rejector as well, kicking off. But you've got enough here, and it's rallying. What did it do? We went up from 24. Right in this red line's our low. We went from our low, literally right up to our high, where you got the delta scalper giving a sell signal, right off the high. Okay, here you have the divergence. This, you got the positive delta on the low. You've got a ratio. Those are the two things by itself. I'm normally interested to take the trade. Didn't want to get those two lined up like that. And then, I'm getting the delta scalper kicking off as well. Here you don't have the divergence. You still got the negative. You don't have the ratio. Actually, that is a divergence, but you don't have a ratio. You got the delta scalper kicking off, and this one failed. But you just had a nice 20-tick winner. And we just went higher, and are just sort of hanging around our highs right now. So we'll see if we'll see what's going to happen with this Brexit vote on this. Okay, but real quick, the next chart I want to show you is the EURUSD chart from yesterday and even this morning. I think it's interesting. And okay, so the EUROSTOXX, again, EUROSTOXX is the trades on the Eurex. It's a good contract. It's 10 euros a tick. So we come down into the swing low. Nothing in the ratio. Rally up to the swing high. You got the price rejector. Yeah, it came off a little bit. Then you got down. You got to it came off here a few 5, 6 ticks. You got a nice ratio here. You know, I'm not saying you would have gotten along off this one ratio, but you know, you should have been, if you were short, you could have covered. And you know, we went up, boom, right up to, you know, the high. It was the high of the day at that point. You got a divergence. You got the price rejector kicking off. You know, if you're not necessarily convinced that this is the high, you know, you wait for the next bar for some sort of confirmation. But you know, really with the price rejector and a divergence, you know, it's a good enough trade to take. And you know, you're getting short somewhere around this 86, 87 level. You know, it gave you a move, 10 ticks, and just kind of went sideways before coming back up. Hit these two this double top here with the price rejector. You know, the price rejector, a nice juicy ratio, and you know, we came off, you know, then went sideways. You know, it was a quiet market yesterday. This was the time, 9 o'clock, when Janet Yellen was speaking. You know, so it's going to be difficult to trade. You know, I don't advocate necessarily trading, you know, during the Fed chairman speaking, even though I did take one trade yesterday. You know, it's just one of those things, you know, it's, you know, sometimes you get the itchy trigger finger, so to speak. You know, I tried my best to sit on my hands, and you know, so anyway, you know, we came up to this high here, the high of the day. You got the price rejector kicking off, and you're just going sideways. Then you boom, you really fall off. You know, later, you know, your high is at 96, and you, boom, it was quite an aggressive sell to the low, well, not to the low, but lower. You know, good 30 points lower. Then, you know, 1 o'clock now. You know, you got to be careful. You know, European cash markets close, you know, 10:30, 11. You know, there's various markets that close at various times, but you know, so but the futures still remain open, so you can trade them, and there's decent volume. I mean, people do trade it. So, I mean, you can see here, you know, it's 1 o'clock and it's trading, you know, 700, you know, 1100. You know, for some markets that are open in the U.S., you know, so you know, this would be very good volume. You know, for most markets around the world, actually, you know, and this is when the cash is closed. So we came up to this high. You got the price rejector, you got a ratio, and then 2 bars later, you got the price reject. Sorry, this is the delta scalper kicking off here, and you know, you know, see, you know, really, this is the sell here. You know, this is a nice confirmation. We did rally back up to 82. You know, so it was 1 tick off this high. I think this was 83 was this high, you know, but it's no need to panic just because you're retracing back up to this high. You know, I'd get worried if we got on the other side of that high, and then what happens? Then boom, then you fall over, you know, from the 80 level down to, you know, literally almost 60, you know, down below 60 late, and then we just closed for the day. Then okay, so we opened here. This is today's session. Yeah, we're going lower. Okay, here was a buy on the price rejector. Well, this was the divergence here at this high. There's no ratio. You got a ratio afterwards, which I like. And, you know, it did go lower. It went a little bit, you know, about 5, 6 ticks lower. You got a price rejector buy here. You got a ratio. You got the single print. You know, you're thinking, hey, it's, you know, things are lining up. And then it just goes sideways on you. Then you get a ratio. You know, honestly, I probably would, I didn't trade at that time, but I would have been most likely stopped out as it got down here, you know, around the cash open. 2 o'clock is the European cash open. And then you get this buying imbalance here. Again, it's at the cash open. You know, I usually don't take signals around the cash open. You know, even here you got the price rejector kicking off with a ratio, but you know, I really don't like to trade around, you know, whether it's the US cash open or the European cash open. However, here 226 this morning, yeah, you sort of have this, you know, your high is here at 30.02. You came up to 01, so a tick off your high. You know, your high was, you know, earlier. And then you get the delta scalper kicking in. You know, I like getting the delta scalper, either a buy signal or a sell signal right off the highs or the lows. You know, a sell signal off the highs or a buy signal off the lows. And this is, you know, trading 98, 99. Your high is 02. To me, that's right off the highs. And I mean, it doesn't have to be, you know, the bar right on the high. It could be, you know, you can be lingering around the high, and then you're seeing the shift in supply and demand and the market to sell off. So we had a nice sell off here from, you know, the 96, 97 level, you know, just, you know, down into the 80s, you know, even lower. I don't know where we're trading at right now. We're trading around 83 right now. We didn't get as low as, what is that, 76. But you had the price rejector here. You get a ratio, then a ratio here. You think it's going to go higher. It didn't. It just sort of went sideways and came off. But really, to me, this was a beautiful setup here. This price rejector giving you a sell. You could have got at least 15 ticks out of it. Okay, so thanks for watching this video. To learn more about the trading software used in this presentation and how you can profit from order flow trading, visit my website, www.orderflows.com, or send me an email. There's a form on my website. You can send an email to me. Just fill out your name and email address and your message, and I'll do my best to get back to you. If you want to throw stones at me and say I'm an idiot, I don't know anything about the market, go ahead. I'm not here to, I'll say not here to make friends. I'm here, I've been in the markets for 20 years, over 20 years in my life on a professional level. I've worked at JP Morgan 8 years, Cargill 4 years, Commerce Bank for 3 years. So it's not like I just took a weekend course, boot camp someplace, and my experience I'm trying to give you is real life experience. So it's whether up to you whether or not you want to accept it or not. Maybe you already spent $10,000 on some guru's trading course and you think you know everything and you want to tell me I'm an idiot. Yeah, sure, go ahead. But I've made my living trading, and I'm just here to give you help, basically. I'm not saying you have to use my software or anything. You don't. If you're smart enough, you could pick up what I'm learning in the videos by yourself. But if you think that my software can add value to your trading, then that's great. Let me know, and we'll work something out. So thanks, and see you on the other side.